New markets news. China and Hong Kong stocks rallied to multi-month highs on Friday, led by rare earth tech giants ahead of US-China talks at the Asian Summit and expectations of further policy support. The rare earth sector led with rally with a surge of nearly 6% to its highest since early 2023, while the broker's shares jumped nearly 4%. The Hong Kong share Hang Seng has gained 0.6%, while China's Shanghai index is up 0.4%. The Nikkei, the Japanese Nikkei, that is declined 0.4% at the close of trade. Wall Street indexes rose on Thursday, with the S&P 500 and the Nasdaq Composite marking closing record highs as investors shrugged off President Donald Trump's latest tariff moves, while investors were encouraged by an upbeat forecast from the Delta Airlines. Delta shares rallied after the carrier forecast third quarter and full year profits above Wall Street estimates. Investors celebrated across the sector, with United Airlines and American Airlines also rallying. Nvidia's return to its $4 trillion valuation milestone for a second straight day was also a boost. The S&P 500 gained 0.2, while the Nasdaq Composite gained 0.1. The Dow Jones Industrial Average rose 0.4 to 44,650. Right, the All-Share Index is down 0.6% at this hour. It's sitting at 96,761. And when we look at the currencies, the rand is sitting at 17 rands 83 to the US dollar. It's trading at 20 rands 85 against the euro and at 24 rands 15 to the pound. Let's take a look at the commodities for this hour. Gold is trading at $3,342 an ounce, and platinum is at $1,354 an ounce, while Brent crude oil is at $68.91 per barrel. Patrick Mathidi is the head of equity and balance funds at Aluwani Capital Partners. Patrick, thank you so much. Always a great pleasure speaking to you here on Point. Perhaps let's start by wrapping up the week that was. Tariffs. That was all that we focused on. We saw the impact of that in both the Asian and the US markets, but perhaps let's bring it a little bit closer to home, and how at Aluwani Capital you're seeing the impact of these tariffs on the South African market and different industries.
Yeah, good afternoon, and thanks for having me. Indeed, it has been a fairly busy week. You'll recall, July the 9th was the 90-day deadline after the April, announcement by President Trump of all these tariffs across their trading partners. So 9th has come and passed. There have been a few countries like ourselves that have received letters informing us of the new tariffs with effect from 1 August. But I think in those letters, there was a window left within which to can negotiate. So we are still hopeful, that our economy or our authorities will negotiate, with the counterparts. But also, when you look at what the trade minister has said of the US, it would appear there is still some scope for further extensions, just because there are quite a few trading partners that they need to negotiate with. But I think if you look at the markets, the markets have kind of shrugged off that uncertainty. As you said in the introduction, we are seeing all-time highs across all financial markets, including our own. But I think there could be some element of maybe a bit of excitement before we get finality of the tariffs, and that starts to impact on the economies once those tariffs become effective. So still a bit of a breathing room, or sort of a honeymoon window, but we still are concerned, from our perspective, that the impact of those tariffs, if fully implemented as is, should be negative for economies like ourselves.
Yeah, and definitely there was a piece that I read this morning where they talked about how much it will actually put more pressure on the already high unemployment rate that we have in the country, while we're focusing on the specific industries like, for instance, the nut and macadamia nuts industry and how that will be impacted. We must not forget about the impact on jobs. That should it go ahead with the 30% that has been currently put on the table, we're likely to see the jobs numbers, the unemployment numbers increase even further. What's your take on this?
No, absolutely. I think that's the biggest risk that we face, as a country, especially those sectors in agriculture that are highly impacted, should these tariffs come to play. As we say, the citrus industry, the macadamia industry, and also our wines that we export to the U.S., do face, those are steeper tariffs. So should those tariffs become reality, then absolutely, we are expecting to see jobs being shed, and these are especially low-income jobs, so very, very impactful in terms of the low-income segment of the economy, where chances of other jobs, in other sectors are very, very slim. So indeed, it is a very high sort of a risk area, and then hopefully we do get some response, from our trade and industry sector or ministry in terms of what they're able to offer, the U.S., in return.
Yeah, we don't have a very busy week data-wise for next week, but I know that we have, from Stats SA, the mining production data due out, as well as retail sales figures. The retail sales figures, I found them quite interesting and encouraging of late, that they have been doing much better than they were previously. How are you expecting, or what's your forecast at Aluwani for these two prints next week?
Look, we expect the mining production numbers to have a little bit of a bump. It may just be early yet, largely because we are seeing commodity prices sort of rallying on the back of some of these tariffs. So we should expect the mining sector to respond by upping or increasing their production into these high prices. And then on the retail side, it can be a bit confusing at some point, because in aggregate, retail sales numbers don't grow as much. They tend to be linked with GDP. But what we do see is different companies within the retail sector stealing market share from each other. Yeah. So we know that Shoprite tends to have a much higher market share growth compared to the likes of Pick n Pay that are struggling. So we expect the overall numbers not to be very, very strong, largely because of the economy. But we do expect that the players within the sector, there should be a lot of movement from a market share point of view, where some of the current incumbents are able to still steal market share from some of the laggards.
Let's quickly wrap up this. The Bitcoin, it rallied to an all-time high today, powered by, they say, demand from institutional investors and crypto-friendly policies. What does this mean for people who are investing in Bitcoin?
So there are quite a few factors driving the Bitcoin price. One is, sort of this fear of the impact on tariffs on the U.S. economy, especially. One in the form of high inflation. So we do see, from a flight to quality and from a store value point of view, we do see gold price and Bitcoin and sort of running lockstep, and that's what we saw, most of this week. And then also, in an environment where the dollar is weakening, again, weakening on the back of similar concerns around the impact of tariffs on the U.S. economy, we do see a lot of capital then going into gold and also into Bitcoin.
Patrick, always appreciate your analysis. Patrick Mathidi is with the head of, or rather he is with Aluwani Capital Partners. He's the head of equity and balance funds there.